Hello, my trading warrior brothers and sisters. Dale Pinkert here at TradeGATEHub.com, and we are powered by TradeView Markets. Check them out and see how they power us and how they could power you. Open up an account and see if the spreads are tighter with TradeView, execution better with TradeView, and customer service as well. Very important aspect of it. So Monday, when I talked to you last, I was talking about the potential of a high in cable between 118.5 and 120. The intraday high yesterday was 120.28, so a little bit above the upper end of the zone. We did have, it's still a positive day. You can't call this a reversal day, but you had a pretty big wick, and it started off higher today. If we could start trading back under this big round number of 118, I see 116 as a very critical level. That was where we broke out after the CPI, right above this 116 level. So I could see a retracement into that zone, and actually think that this is even possible down here under the 114 handle, which is going to include, of course, a dollar rally. And today pound is up 21, not as strong as euro, and euro looked to have some type of peak, but it's really fighting its way back pretty good. Perhaps we're going to retest yesterday's highs. Let me look at the 15-minute. We could, but it's still from yesterday. Even though we're trying to rally, we could put in another high, but I think we'll find some pretty good resistance up here around the 420 level. But right now the count is more bearish in the pound than it is in euro, and that's being expressed by a pop in EG. And I'll tell you what, normally I could get some type of edge deciding what my preferred longs and shorts are in euro pound, but it's a range bound market since this emotional peak. And this is when we had the gilt crises and the BOE stepped in, and that was the low in the pound at the 103.5 level. So what I'm looking for is a correction of this whole advance. I think this is completing this advance, and now we should get some type of correction. An interesting setup coming up in yen, and we all know how it got hammered. Talked about the descending triangle, was bearish even early. I thought that this 146.80 was going to be it. Of course, we spiked to 152 on intervention, began to work, and then the benign inflation reports really got it going to the downside. In fact, we really did achieve the objectives of this formation, even if you call it, you don't have to call it 46, call it 45, and 52 gives you 38, so we're there. So I want to call your attention to what could be setting up in the days ahead is a 3 drive to a bottom formation. As you can see, the first drive right here actually did diverge, but if you've been following my work for a while, ideally I want to see divergences happening above the 30 level, which is what happened here, or close enough for government work. I guess that's 28. So if we get one more shot down into this range, down around 137-ish, and you see the RSI holding above 30, I think it's worth a shot for a recovery move that from here could take us back to 43. Not sure if we're going to get back to 45, the old breakdown, but 43 is possible. So I'll be paying attention to the end down here. That's still a couple hundred points underneath it, and we'll see what the dollar does in the meantime. Dollar has a similar setup, and if we do flush one more time, and I'm premature on the pound, I want you guys to take a look at the 104 level. And this is going to be an important bull bear line for the whole bull case, which I think is dead for a while anyway. I do believe this is the top, but when you look at this long-term important support, okay, important resistance. So this was COVID, right? This must have been the taper tantrum, but same level. We broke out above it, but what really convinced me about the importance of this level is how we came back during this month of August and actually tagged it again and gave us the acceleration to the new high. So I do believe between here and 104, with the power of the move of this bull market, that you rarely just see a market peak and just crash. I'm not saying it can't happen, and under 104 you're going to see I think a bit of a panic, but normally with this kind of strength and momentum, you get an echo of the strength that should give us some type of failing rally at the minimum, maybe back to 108, maybe 110 in the weeks ahead, maybe into December or the beginning of next year before we get wave 3 to the downside, which is going to take us sub 100, probably the mid 90s. So that's the way I'm looking at it. Gold is finally starting to come off. Looks like it's popping. That's a monthly. Coming off a little bit. I thought that gold would have trouble between 1790 and 1800. I still contend it will. And then if you look at it on a weekly basis, if that ends up being major resistance right here at 1800, and then look at 1800 here, and then look here, this is the left shoulder at the pivot and breakout. So if we rally up here and start to work sideways and even get a retrace back to the breakout, that'll be your right shoulder. And I was showing this yesterday, did a couple interviews, one on Real Vision on it. And the next day, of course, it wants to make a fool out of me, but I was talking about how I see this as a falling wedge, and this is a gold-silver ratio. And if this formation manifests, it's going to generate a pretty good rally in the gold-silver ratio back at least to where I have this wedge anchored back to 96. And that's going to be some major underperformance of silver for a while should this falling wedge manifest. I think a first sign will be getting back above this 83.5 pivot was important. And then, of course, you're going to have the breakout and 200-day moving averages right here at the trend line around 85.5. So that's going to be a key event for metals should it happen. And I'm imagining if it does that perhaps if we still do get a pullback in metals and maybe gold pulls back to that level 1700, I'd like to see where silver is if gold gets back towards that 1700 level, because if it's happening at the same time this is breaking out, who knows how deep silver could go. In the silver market, I don't think you want to see closes if you're bullish back under 2080. Okay, they tried to rally it again early today and still having trouble at 22. So you can really wait for a breakout over 22, maybe wait for 2 daily closes above 22. Doesn't mean it means that you may have to pay up, but at least you'll have confirmation. Because if we start taking out this 21 level, which was the peak of this false breakout, and the highs that we had back here, it's going to be a negative signal to me for us to start closing under 2083. Watch that. That could lead to a wholesale rout in silver again. And what I want to wrap it with, and all of this happening in the face of falling yields, what's interesting is that we could get to a point with yields falling, and I'm on the record for looking for a 3% yield, where it's interpreted not the benign inflation begins to turn into weaker economic numbers possibility, and that may be part of what is going to be about, should I be right, the underperformance of silver compared to gold, as it is also an industrial, they're going to use it it's in solar panels, it's in everything. And S&Ps, the old expression, Thanksgiving is for the bears. Well, we're about a week away, aren't we, from Thanksgiving? Exactly a week. I think we could get a little pullback into it. I think 3,600 is safe. And this is really going to be the major event. Let me pull up a weekly on the S&P. So everyone's looking at this downtrend line right here. And also here, so much confluence here. Trend lines, moving averages up around the 41 to 41.50 level. But I actually think after we get a little pullback here, we're going to break out over this channel line. And we could even make a move, squeeze a move out to, maybe above August highs, 43, 44. And I think you'd see a lot of euphoria. Maybe it happens by the middle of next month. And then I think we could be set up for some type of rug pull. But for now, I don't want to short it, even though I think we could pull back. I think the better shorts happen sometime mid-December. So, like they say, do the right thing today, and tomorrow will take care of itself. And if we're adding value to what you're trying to accomplish here, let your trader friends know about us. Hit the like button. Welcome to make comments. You have any questions, you could come right into the main chat room. Bring me your chart if you're confused about a position, and I'll give you my perspective. Here at TradeGATEHub, we have Mike Venezia, one of the most active and effective stock traders I've met in my long and storied career. I think you could learn a lot from Mike, besides get great ideas. And just want to say thank you to everyone for their attention. I know it's not easy to become a trader. You can't be lazy. It's hard work. You have to dedicate time. You can't learn experience. It only happens with the passing of time. And in our job, that's screen time. And living through things, living through things, and including adversity, and learning how to get up off the mat, and not being a quitter. So I'm not saying there's anything wrong with taking time off to reassess, but you really don't lose till you quit. And that's a wrap for me. I know Mike's going to be with you guys in about an hour and 15 minutes. And tomorrow I'll have Helene Meisner with us. Helene writes for thestreet.com, has excellent technical views and charts, and she's been with us before. Look forward to catching up with Helene. Enjoy the rest of your trading day. Good hunting. And don't just count your pips, count your blessings. I'll be talking to you at 116 to 113 pound sometime